Hello and welcome to an all-new episode of the Bitcoin News Show right here on the CryptoCast Network. Thank you, ladies and gentlemen, so much for joining us. A big week for Bitcoin this week. I'm super excited. I'm stoked. I'm sure you guys are as well. Everybody at the blockchain week, of course, the Magical Crypto Conference and Consensus. It's going to be a lot to talk about. But of course, then there's the big, huge price run up. We'll get to that, guys. I'm getting a little bit ahead of myself. Before we do that, we are screen sharing the website here at CryptoCast.network, where you guys can find our YouTube channel, Twitter, Instagram, iTunes, and RSS feeds. There's some merchandise on there as well if you guys want to see that. But if you guys want to support the show, if you guys like the content that we do here, we really appreciate it. If you guys could check out our donation button there on the website, it has the QR code to our Bitcoin address, as this is a community-supported YouTube channel. So we very much appreciate all the feedback and all the donations from you guys. We're really trying to do our best here to get you guys the most honest, authentic content we can. So with that aside, let's get to the next web tab, the next browser here, guys. We have the Bitcoin 2019 conference. This is going to be pretty interesting. I've been talking about this for a few weeks, guys. I'm really excited. It's going to be a lot of speakers here and a lot of Bitcoin focused speakers. This is going to be in what is this? San Francisco, and coming up in June. So it's gonna be a lot of great people, including some of the people that are speaking today at the Magical Crypto Conference, like Andrew Palesta. Man, really great quote from him that I'm going to get to as well. But a lot of great people are going to be here, guys. So I'm really looking forward to that. And then it's really cheap too. I think it's only like $150. So if you guys get a chance, check that out. Now, with that aside, let's go ahead and get into your quick bits section, guys. We got a lot to talk about and go over here. So let's pull up the notes. First things first, the pretty biggest news of the week, in my opinion, when it comes to the technicals of Bitcoin here, guys. What we have the Taproot BIP released, and this is really big. This is going to this is kind of not going to have all the bells and whistles right away, like that signature aggregation that's going to really do some profound things. But this is the first step. This is the first door into this big upgrade. Essentially, this big upgrade that's coming, guys, is going to be this Taproot and Schnorr in one BIP, and it's going to be probably the biggest upgrade to Bitcoin since SegWit. So I'm really excited that this is moving forward now, so that the world can take a look at the technology and agree on it. But the BIP has been placed in there, so I'm really excited about that, guys. Lots of good stuff coming. Schnorr, together with Taproot, is going to provide a huge amount of win for privacy and for scalability, guys. Huge. And of course, for utility, there's just so much stuff you can do with it. So really big news. Make sure you guys check out all the links for these notes below there in the show notes. There's lots of links on here. And of course, they're all mostly to Bitcoin Magazine. So again, shout out, guys, to Bitcoin Magazine. You guys are just still killing it over there, doing Bitcoin only focused content. Then we got Bitcoin Core, guys. 0.18 has been released. This is kind of a big one as well, because there's some very expected technology in here, some very anticipated technology in here, and that is, of course, the ability to connect to your hardware wallet. Now, some of these other wallets out there have been doing that for some time, but this is the Bitcoin Core wallet, guys. This is the main software that powers many hundreds and hundreds of millions of dollars of commerce and things like that. So we have to make sure we move nice and slow and steady with that. So that has now been implemented natively into Bitcoin Core. You guys got to check that out. Really cool. Then moving next on, we got the Bitcoin transactions, guys. They are spiking again in April. Actually, they're spiking now too, but essentially they're spiking like crazy. And SegWit is keeping these fees low still. So that's really incredible. SegWit is doing its thing. Bitcoin is scaling. We have Lightning. We have people batching their transactions now. So Bitcoin is scaling. We are seeing tons more transactions, super low fees, and consistently now over 1 megabyte blocks. So it's just awesome news, guys, all around for those. Make sure you check out that link. Really great research in there. Really interesting to see Bitcoin scale, guys. Then we got Bitfinex. Of course, they have released their white paper for their LEO token sale. I'm not sure how I feel about that, guys, but I thought I'd mention it. It's pretty big news because, of course, they got they're dealing with hacks. They're dealing with all sorts of different things. The biggest thing, of course, they're dealing with that $850 million freeze. So they're going to try to maybe get around it with this. And again, guys, Bitfinex, you can say what you will about them, but these guys just don't give up. They just keep going. Like they'll create a token, they'll create an IEO, an ICO, doesn't matter. They'll just keep going. So love them or hate them, but I don't think they're going to be going away anytime soon, guys. So check that out. Interesting stuff. And then Jameson Lopp has released a really awesome op-ed on fake Satoshi. This just points out so many inconsistencies in fake Satoshi's history of all of the things that he's been doing online. Just really terrible stuff. Make sure you check that out, guys, so you can see that the fake Satoshi really is fake Satoshi. We don't just call that. We don't say that lightly, guys. He really is the fake Satoshi. And then HTC, this is kind of big news. HTC is going to launch an Exodus phone, an Exodus 1S, and this is a smartphone with full node capacity. That's right, full node capacity on your mobile device. Now, of course, it's going to be pruned by default because you're going to require an SD card for that full 200 gigabyte chain, but it's still pretty fascinating to see that this is the understanding of the importance of full nodes is really getting baked into the ecosystem, guys. Everybody's really starting to get it. They're starting to understand this is what keeps Bitcoin decentralized. So that is really, really great. And of course, the UASF and SegWit, that helped a lot. It showed to the world that Bitcoin is not run by companies. It is run by the people. So very, very cool stuff. Make sure you check that out. And finally, I just want to end the quick bits, guys, with a quote from Andrew Palesta here. He's the director of research over there at Blockstream. Had a talk today at Magical Crypto Conference. He says, he's talking about Bitcoin and Bitcoin and cryptocurrencies and the difficulties, guys, that this really takes to keep things decentralized and really make sure that it's robust, secure, and robust. He says, this stuff is difficult. This stuff is subtle. If you are frustrated by how slow Bitcoin moves, let me tell you, Bitcoin moves too fast. Cryptography is hard and scary, and we need to make sure we move slowly. So very, very important words, guys. Of course, we have the hashtag reckless, but just very important words from Andrew. Again, guys, just echoing the difficulty it is in creating these technologies. It takes time. So with that aside, guys, I'm going to go ahead and introduce our amazing panelists today. We're going to be talking about them. They each have articles out there that I really recommend everybody check out. Again, of course, in the show notes, we'll be discussing them a little bit today. So let's talk to them first. Mr. Spencer Bogart, partner at Blockchain Capital. Spencer, how you doing?
Doing very well. Thanks for having me on, Vortex.
Yeah, man, awesome to have you on. I think I've had you on before. If not, then we got to have you on again, man, because you always got interesting stuff to say on Twitter. Of course, you got awesome articles, Medium articles, and a lot of great insights, man. So appreciate that.
I appreciate that.
Yeah. All right, and then we got Mr. Tib, but it looks like Tib is not on camera right now. Tib, are you there? Nope, he had to step out for a second. Probably raining on him. He's actually outside right now, so we'll have him be introduced in just a second. That is Tib from the Bitcoin startup Yellow. Tib, is he back?
Yes, I'm back. Hi, yeah. How are you?
Yes, man. Good to see you. Good to see you. Really glad to have you on today. Again, we're going to be talking about your article as well on here, so I'm really glad to have you in the space. A lot of stuff to talk about, man.
Great to be here. Thank you.
Yes. All right, so let's get into it, guys. The first article, not too bad. We try to keep it to a few minutes there to the intro. Not too bad. The first topic, guys, this is the big one. This is we're going to be talking about a little bit. We're going to try to keep the price talk to a minimal, guys, on this show. As you know, we're hodlers on the show. We try to keep the price talk to a bit of a minimal. But I am a bit of a speculator. I'm a bit of a technical analyst. I like to look at charts, guys. I'm sorry. We're going to admit all of our faults right now on the show. I like to look at charts. So we're going to talk a little bit. I'm curious to see what these guys think about some of their market thoughts here. These guys have both been in the space for a while. They both are working on projects in the space. So, Andrew, let me ask you first, man. What are your thoughts on this price run-up? Because we had the big spike there to 5K in April, and then now just in the past couple of days, this past week, we've been spiking over to 7K. So, what are your thoughts on this? Is this a natural sort of move? Was this like just a bunch of buy orders, or is this a natural sort of kind of a technical lineup of the daily, weekly, monthly, and so forth? To Spencer, sorry.
Yeah. Happy to jump in. So, I mean, hard to say. Like yourself, I don't follow short-term price moves too much. I mean, definitely we got some short squeeze action in there. We've seen BitMEX funding rates flip positive. So for the first time in a while, longs are paying shorts, where it's been the inverse for quite some time. So, on that upward move, I mean, eventually what happens is people start getting liquidated. When they're getting liquidated in their shorts, that means that it's forced buying in the market. So you start to have a big move up in the market, which is exacerbated by a bunch of short closing. So, this is classic short squeeze. Does that mean that the market can't sustain these prices? No, definitely not. It's also hard to tell if some people in the market know of news that might be coming out next week, especially with blockchain week going on. Really hard to tell. I mean, the way that I think about it is I still think Bitcoin's radically undervalued relative to what it's going to be worth 5 years from now. So I try to stick to the longer term view here.
Absolutely. I mean, it is really a big week. We've had, announcements from Bakkt, Fidelity, and of course, like you say, the blockchain week is here with consensus. So it does seem to be Bitcoin on everybody's minds. Pretty interesting to hear. Let's hear Tibbs' thoughts on this. What are your thoughts on that? I mean, because we know that nobody can actually know the price, the real reasons why price moves exactly, right, guys? But Tib, what are your thoughts on these do big movements? Do you think that it was just time because it was just about the end of the bear market, or what do you think? Price manipulation, or what do you think?
I mean, I'm not a TA trading expert, nor do I read tea leaves, but I definitely it seems to be a translation of the sentiment that was around the market. The market being the best proxy for it being Twitter and the overall just media. Now, definitely, the entry point of liquidity that sort of triggered that big short-term bull run was done at a time where the book orders were very, very thin. So it's sort of, I think it's Murat who's saying this on TFTC, and he'll, of course, say it much better than I do. But it really seemed to have pierced through the order books, therefore creating a massive pump in the price. So is that sustainable? Definitely not. Is that interesting in the realm of things? I would say it is an interesting signal that sort of seems to make the market convert from a bear market and to the beginning phase of the accumulation, which is the start of the bull market. So interesting, but again, it isn't something I do on a regular basis, just looking at price. And I'll just keep on stacking sats. I think we need to look at it from the long term. And people try to time the market. I've tried, I've failed, and I'll stop trying.
Me too, man. Me too. So, what are your thoughts on the overall implications of going into a bull market? Is it too early? What do you think?
I truly believe it. It still is. I mean, it is early for sure. It always is early. I'm personally not ready to, receive calls from family and friends and just like take these. Like, man, it's such a distraction. But at the same time, it's still the best use case for Bitcoin: speculation and greed, and that's how we bootstrapped the network up until today and brought it to a over $100 billion of market cap. It's still, Bitcoin is still not money. It's still not a stable store of value, nor it's a media victims. So definitely interesting. But I'll try to be focused and heads down on building stuff. And I think there still needs to be a tremendous amount of infrastructure that needs to be built to welcome the next wave of adopters who are, by nature, if you move along the sort of phase of adoption, you move from the innovators that are extremely technologically savvy to more of the early adopters who are tech savvy but don't necessarily have the technical skills and the sort of CLI wizard type of skill sets. And so these people, of course, they need a bit more resilient infrastructure that is focused on usability. And so truly believe that the next wave of adoption will require these products that make security improvements while at the same time making security usable and friendly to use.
Absolutely, absolutely. Spencer, your final thoughts on this topic?
Yeah,
I mean,
sorry,
go ahead.
Yeah, the only other things I want to jump in and add are just, one thing that really shouldn't be a factor, but I do think plays into the market sentiment a bit is, of course, the halvening. The way that markets work is that this information is well known and telegraphed, and there's effectively close to near zero risk of it actually happening. So in theory, it should have no effect on the market, but I think it does. I think that for now anyways, given Bitcoin's kind of nascent state, it acts as kind of a shelling point for people that are on the sidelines and are thinking, hey, you know what, it looks like the market, maybe demand has kind of bottomed here, and meanwhile we have a supply contraction, not a contraction, but a decrease in the inflation rate approaching, and I think that that's a compelling reason for some people to say, okay, I'm going to get off the sidelines and move into the market. And then the only other point is just kind of anecdotal here. So we recently ran a survey of, we hired Harris Poll, who does professional surveys of the American population, to kind of gauge Bitcoin awareness, familiarity, perception, conviction, propensity to purchase, and actual ownership. And this is a refresh of the same survey that we ran in October 2017. So if we contrast those two market environments, October 2017, we're in a massive bull market. I think Bitcoin was up something like 600 to 800%. year over year. When we ran it in spring 2019 here, just about a month ago, the market was the exact opposite. It's down, 82% or something from its all-time highs. And yet what we found was that across the board, all of those factors improved. People were more aware, they were more familiar with Bitcoin, they had an improved perception of it so that it was going to be a positive innovation moving forward. They had increased conviction that it was going to be a meaningful part of the economy going forward. They had an increased propensity to purchase. So that's saying, do you think you'll buy Bitcoin in the next 5 years? Drastically more people are saying that now than even in the bull market. And then actual ownership also ticked up. So, to me, that was pretty amazing. I wouldn't have been surprised to have seen numbers kind of flat, just considering the extremely negative market environment and how that affects people's psychology, particularly when you're not really close to the technology, when all you know is that, hey, it's fallen 82%. That sounds scary, right? And yet, despite all of those negative headwinds, this just continues to chug along. And what's really interesting there is that it's particularly driven by the youngest age ranges. So, we unfortunately had to confine our survey to those over 18, because once you're dealing with minors, it's a little bit of a different issue. But the 18 to 34 age group was just by far leading the charge in all of those categories.
Absolutely, man. The millennials,
Yeah.
it's exactly, and of course, there's so many people that predicted this. Tom Lee says this in a lot of his talks. There's a lot of from Fundstrat. There's a lot of people that really agree with this, because we've digitized everything, and these kids, they're growing up with everything digital. I mean, everything. They don't want to get new clothes. They want to get new outfits for their Fortnite character. I mean, this is just essentially the world that we live in right now. And yeah, just great point, Spencer. Like, even in a bear market, or maybe you can call us I still call this a bit of a capitulation where we are right now, like, right, or a bit of a accumulation stage, right? We're in the accumulation stage, but even now, this price is being sustained. Like, we are still around 7K. We spiked over 5. We're still around 7. We haven't immediately corrected back down to 5. I think a lot of people, even including myself, would have thought maybe we should have corrected back down to 5,500 by now. But look, the market is huge, because if you go to first of all, if you go to any one of these blockchain conferences, I don't know, Spencer, how many conferences you guys go to, but the last, Tone Vase goes to a couple of these conferences. He posts some pictures, and the pictures that you see, right, are just endless. There is no end of all of these blockchain companies and Bitcoin companies that are that go to these conferences. Just endless hallways. So there is just a huge amount of people that are in crypto now that just simply weren't here in 2017 yet. And I think that has, I think that's got to be part of the reason. Sorry, did you want to go ahead? You have something else?
No, the only other thing I was going to add in there is just because you were touching on the age thing, and the other important factor to consider here is just trust. So, like, how much conviction do you have in Bitcoin to continue? Well, like, if you're 18 years old and Bitcoin's been around for 10 years and it's been around for more than half your life, well, you feel relatively comfortable trusting it, right? And I think that that's a rational decision based on your experience in the world. On the other hand, if you're 65 or 70, Bitcoin's been around for a tiny fraction of your life. And I think it's a reasonable conclusion to say, like, I don't quite trust this thing yet. A lot of these other things that I use, whether it's fiat or gold or things like this, they've been around a lot longer, and so I trust them. But trust is, again, very contextual to our own kind of life experiences, and people at the younger end of that age range just don't have those same kind of trust barriers.
Yep, it's true. I mean, it really is true. If Bitcoin has been around for half your life, of course you're going to trust it more than, the traditional financial system that somebody has grown up with for decades. So that's just a really great point. But nevertheless, we see it in the data. Yeah.
In terms of mental models, also, I would love to build on top of what you said, Spencer. The internet sort of is a native platform for a lot of Gen Z and millennials to express themselves, to share information, to learn and grow together. And I feel like Bitcoin is just that native currency or native asset that is being built on top of it in a much more, it is much more transparent, much more understandable and relatable to that generation compared to, a bunch of closed door committees where people talk about complex financial things like central banks and all that. And so I think that it is also a very similar sets of heuristics that is easily transportable to Bitcoin from the internet, basically. And so it's just much more understandable overall.
Absolutely makes sense. Definitely makes sense. So just a couple of my final thoughts then here on before we move on to the next topic on the market. Essentially, I really like again some of the points that Spencer said. The halving really is a big player here, guys. It really is going to be here next year. There's always some kind of pump before the halving. You know, usually about 18 months or so, 12 to 18 months before we see some kind of jump. But in my opinion, this big rise, you know, from the 5K and then into the 7K, essentially it came a little bit early. In my opinion, I really wasn't thinking we were going to really break those 120-week moving averages until maybe June, July, August. But this came a little bit early, and so my opinion, I think it's just time. My opinion, Bitcoin is definitely undervalued right now, right? So at least where it is, obviously, I think Bitcoin is very undervalued. But I mean, for right now, just the short term, I believe Bitcoin still is a little bit undervalued. We should be, you know, around 8 to 10K ish. You know, that's where Bitcoin should be for its technology right now, around 10K. So I think that this year we are going to continue to see Bitcoin, you know, bounce between these ranges, between this 5 and this 7, 8K, until we can finally really officially start the bull market. But until then, you know, we are going to be in this accumulation for a few more months. And so what I really see is that going into next year, we're going to have a little bit more correction, but really next year is when everybody is going to really start piling in again. And how the cycles go is I base all my pricing assumptions on the halving cycles, right? So, you know, this 2020 is going, all the price predictions right now are based around the halving. So around 2020, 2021, fall of 2021 specifically is my current prediction for the next parabolic blow off. Right, so around fall of 2021, that will take us to far beyond 100K. So definitely over 100K. And a lot of people are saying like 50K and things like that. But this is when you look at the percentages and how Bitcoin moves, this is we're definitely, you know, 50K is very conservative. 100K is relatively still conservative. So that's what I kind of see. People are starting to realize this. And again, it's just about time. We've had a bear market for you know, good year plus, and it's the if you look at the monthly MCAD, the whole thing is just kind of turning up like a tanker, and that is not easy to move. Once the whole market starts turning, right? Once the whole market starts turning, it's not easy to turn back. So it is very, very evident to me that the prices, people are starting to figure out that we're starting to end the bear market. Now, I won't officially in my opinion, declare a bull market, you know, really yet until we have a couple of weeks over the 120-week moving average. I need at least a good couple of weeks, possibly a month over that before we can declare a bull market. But until then, guys, like everything is kind of going perfect. You can see the so many things being launched, Lightning continuing to go. More and more people using Bitcoin, more and more people talking about Bitcoin and cryptocurrency. So I'm really excited about that. And again, guys, this next bull run, if you've been in crypto long enough, you know it's just inevitable. You know it's just inevitable. We're going to have another bull run, then we're going to have another correction and another bull run. So how I see it right now is by the end of the year, again, we're going to be breaking all these weekly moving averages, specifically the 120-week, the 100-week, the 50-week, breaking all of those, sustaining all of those by the end of the year for sure. And then next year, we can really start that stair step up to a parabolic blow off. So really looking forward to that, guys. We're gonna have a pretty good, at least a good year plus to 2 year long bull rally again, just like before. So it's gonna be pretty big. Only it's gonna be like last time, only way bigger. So just any final thoughts from you guys on that before we move on to the next topic? Nope. Okay, cool. So let's go ahead and move on, guys. All right. So the next topic is Binance. So it really wasn't going to be like that big of a topic. Binance itself being hacked for $40 million. You know, around 7,000 coins. But then they had to start talking about friggin' block reorganization. And so now we got to talk about it. Now we got to tell you guys about it. And so I'm going to get you guys' thoughts on this, of course, before we go to my thoughts. But Tib, let's go to you first on this. You know, what do you,
this is very political.
Well, hold on. Let me give
territory.
I know, right? So let me give a couple stats for the audience. So on May 7th, Binance was hacked for 7,000 coins. The attackers, they say, used a diverse range of tactics from viruses, social engineering, phishing scams, all that stuff. Binance is now suspended withdrawals. Tib, what are your thoughts on first the hack itself? You know, is this just another inevitable hack, and is regulation going to come down on us? And then we'll get to the reorg stuff after that.
Yeah, there's an interesting parallel to be made with FinCEN's latest release of their guidance for, you know, custodial services, and the fact that they need proper standardized security protocols to ensure that loss events are, you know, reduced in their probabilistic distribution. And so, at the end of the day, you know, the standard stuff we keep on sort of hearing in the space, not your keys, not your Bitcoin, it is still striking. It is still very relevant, and that is why Binance allocate 10% of their trading commissions to that SafeFu insurance fund, right? Which is smart, but it's still, if you want to hear, my honest opinion, it is very much a short-term hack, right? Insurance companies, for instance, are still not touching these companies. 90% of the funds that are held in cold storage of all the exchanges are not insured. They're bearer instruments that are held by trusted counterparties that have default and credit risks, and customers are being exposed to that. And we talked about this briefly on Twitter, and there's been a few conversations in terms of having a sort of credit rating system, sort of a way to understand, like the rating agencies, but for cryptocurrency exchanges, in terms of understanding what is the counterparty risk when I trade on such exchanges as a customer. So yeah, short answer, really, it's about making sure that you use those exchanges for what they're good at, which is matching buy and sell orders. And as soon as you've done that, get out of it and store your coins on cold storage or hardware wallets or other solutions that diminish the risk of losing those funds.
Absolutely, and and I think that even CZ himself, the CEO of Binance, announced that they're going to start supporting YubiKeys and a couple other things. Now, of course, that's a great step, and using supporting hardware keys, but the implementation is key, right? So MTGOX had YubiKeys, right? So that didn't really help MTGOX a lot. So it's all about the implementation. Now, this I think is a great step, having YubiKeys and having additional hardware devices. But of course, as we know, the only way to prevent your Bitcoin being stolen is having the keys reside with you, and that's just simply not possible in a centralized exchange at this time. Now, of course, they're going to try to start a decentralized exchange from a centralized company, so it's not really a decentralized exchange, but we're going to see maybe where that evolves. Spencer, your thoughts on this hack itself? Like, again, is regulation ever going to, is insurance funds and regulation ever going to kind of come to the space, or are we still going to just kind of need our SafeFu funds?
Yeah, I mean, you know what? I think that insurance companies, are getting increasingly comfortable with this. I mean, if we look at the heart of like what an insurance company is doing, right? You need an actuary to come out and be able to price risk. So in these cases, because we're still so early in the crypto experiment. It's a little bit difficult to assess what are all of the possible attack vectors, right? Like if you're an insurance company and I'm insuring against gold that's held in a vault, like I have a relatively good idea of all the potential attack scenarios for that and how to prevent against them. So I have a good idea of how to quantify the risk. When it comes to like crypto, I don't think that most actuaries have been prepped with this kind of background for crypto in particular. But that said, I think that they're getting better at understanding the risks involved and what comprises a really safe kind of security module. And I think increasingly too, some of the industry is pushing towards some established kind of security standards for these things that kind of fit it into a bucket where actuaries can say like, okay, listen, I've already been insuring risk that has these kinds of security parameters around it. And now all of a sudden crypto is kind of fitting into that box. And therefore I'm a little bit more comfortable with it. I can price the risk, and therefore insurance companies can provide cost-effective insurance for exchanges. And so I think over the next few years, we're going to continue to see increase in appetite. I mean, particularly as the market grows in size, this is a market where insurance companies, actuaries, have a stronger and stronger incentive to be able to understand the risks involved and to be able to lean into that risk and try and gain a first mover advantage in being the kind of one of the main insurance providers for the industry.
Absolutely great comments. Let's get a little bit maybe into the reorg stuff here. Tib, let's go to you first here. What are your thoughts on this? Because this kind of came pretty crazy. I mean, essentially, what happened was that CZ, the CEO of Binance, he kind of let slip that in an AMA right after the hack that only an hour prior to hearing this information, he was like, yeah, the community suggested this, that we do this reorg, and we're looking into it. And of course, that kind of spooked the market a bit. What are your thoughts on this? Is this good or bad that CZ is becoming incredibly transparent with the users? What are your thoughts on that?
I have an unpopular opinion to share. Truly believe CZ, he's answering his fiduciary duty to his investors, and part of that is maximizing revenue and minimizing loss. And so, a loss event of 7,000 BTCs require the directors and officers to go and seek all the options available. And then, of course, once you've scoped out the options, you go and assess these options. And some options you'll discount them right away, and some others you'll go and do a deeper dive. And I think that's exactly what he's done. Being open and transparent on Twitter it requires a lot of courage, a lot of resilience, because he's getting a lot of shit for it. And so, of course, I don't support reorgs. I think they're terrible, and they're against Bitcoin's immutability and overall philosophy and ethos, especially coming from one powerful market participant. So definitely, I don't support reorgs at all, but I understand where CZ is coming from. And also, how the market reacted on Twitter is a great testimony of Bitcoin's beautiful governance control, right, and governance model. It just works, right? I mean, like, even if you incentivize miners by, double spending those BTCs and including a large transaction fee in the block so that the miners can actually be incentivized economically to mine that, you still need to figure out how you're going to make all the full nodes accept that new chain. And so it is just Satoshi built a beautiful incentive mechanism that sort of prevents these behaviors from happening. So I truly believe these events, like the reorg proposal by Binance, are just healthy market signals and tests of the governance system of Bitcoin. And so far, it seems to be working pretty well.
Yeah, great points. I mean, the toxic Bitcoin Maximus came out, right? I think is what we can say. I mean, really, the community reaction I thought was beautiful. There was a lot of people that responded technically, and of course, there was a lot more people that responded not so technically. But this is really interesting that we are understanding this more and more. And let me ask you, Spencer. I mean, this comes up, this reorg stuff pretty much comes up every time there's a major hack. So let me ask you, Spencer, is this going to come up yet again when there's another hack? I mean, because how do we explain to these people that it's essentially just not feasible and that you can't bribe miners to destroy their own network?
Yeah, so this was a really interesting week when this discussion came up. I mean, that's one of the great things about Bitcoin, right? Is it keeps you humble because you're always learning. When I first saw this kind of discussion occurring, I was just absolutely horrified. And then I decided to lean in a little bit more and kind of understand what was going on, and eventually kind of came to a similar conclusion as you and Tib, that, for one, I definitely don't fault CZ for exploring all the options. I mean, imagine dropping, $100 note into a river, it starts floating away. You're going to try and grab it, even if that rocks a few life rafts. And I also don't fault any of the people involved with helping think through that discussion or providing the code, because if it's not them, it's going to be somebody else. So like, these things are going to be explored. I think that there's an important kind of social overlay component here that we talked about as far as the community goes, of assessing, what is the sanctity of transactions? Because, certainly what was being proposed is within the technical bounds of the Bitcoin protocol itself. And the question is, does the community want to overlay some additional kind of risk factor for any miner that wants to pursue that? I've always assumed that the community would, whether it's to recover funds from a hack or punish a hacker in this case, or to just try and do a miner just trying to do a malicious 51% attack against the network. People have discussed this a lot in the past, and my response has always been, that's fine, they can try, but as soon as that starts happening, you can imagine that much of the community, much of the industry is going to fork away from it and render that entire effort not only costly, but also not produce any value from it. So, I think overall, I guess the only part that ended up kind of ruffling my feathers a little bit is I think it was portrayed as more feasible than it really is. I do think that it's technically possible, but I think that once you incorporate the fact that there's a lot of humans involved with the network and their reactions to it, that it becomes far less feasible than was portrayed. So, in some way, I almost wish that the attempt had gone through and failed, and then we would have had a real test of it. Instead, I think we got a partial test. It was a discussion, a sharp community reaction, and then a ditch of the proposal. I would have almost liked to have seen just the effort go forward, and then to see truly the resilience of kind of the industry around it, preventing that kind of a reorg. The reality, though, is, Bitcoin has seen reorgs in the past, right? 1 to 2 block, shallow block reorgs do occur. It is part of the Bitcoin protocol. Your funds aren't safe after one transaction or after one confirmation. And so, there really are two sides to the story, but I ultimately fall on the same side. This is a slippery slope. We don't want to go there. And I think it's incumbent upon the community to really be resilient and to push back against things like this.
Yeah, great points. I mean, we saw the transparency, and a lot of people, even a couple people called me out for sort of, saying that he shouldn't have talked about this. But again, like these, in my opinion, these discussions have been ongoing, for years now, and it's a bit of a shame that CZ wasn't aware of these reorg discussions in the past, especially since these hacks were substantial. I mean, this is a little $40 million hack. This was nothing compared to the Bitfinex hack, where it was like 100,000 plus coins, 150,000 plus coins, and now we're going to talk about it. So it was strange that he didn't have the past of that, and I just think that we can transparently. I think that there are things in a company that's internal that maybe you don't want to that just divulge right away to everybody. And now it's important to be transparent. But again, like these discussions have been transparently discussed for years now. And so I think that anybody that was advising CZ that this was even a possibility, unfortunately failed him, like you say, because it was just kind of sold as a little bit too easy, a little bit too feasible. And really, at the end of the day, it would just require a collusion of meat space of people that it's really not possible, because the whole point of Bitcoin is to sort of allow the greed to the greed to sort of like govern itself, right? And so you go against that, you go against somebody's greed, you try to hurt somebody like that. Bitcoin is made up of many constituents. If the miners don't like something, if the other people don't like something, if the wallets, if the developers, if one of the things doesn't like you, they're not going to help you out. And so essentially that's how it works. Everybody's got a gun to everybody else's head. And so that's the beautiful thing about network governance. And it's just really strange that this was presented to CZ as even feasible at all. So that was interesting. But another important point, Spencer, was, your transactions, guys, they're not safe after just one confirmation. There are all sorts of there's actually a site now you can go check out. I don't have it in the links, darn it. I just had it recently, but make sure you check my Twitter feed. There is a site now that you can go to where you can see how many confirmations it takes to get equivalent to 6 of Bitcoin's confirmations. And some of these coins, guys, like Litecoin and some of these other coins, would require the equivalent of thousands of confirmations for 6 Bitcoin confirmations. And we're telling you that even one Bitcoin confirmation isn't quite enough for larger transactions, because this is how tough security is. This is how we've been working on these problems as humans for thousands of years. Bitcoin is the final result of essentially of trying to mitigate these problems. And really what you have is Bitcoin as layer 1. You have this as a settlement network. That's why we have confirmation times, because instant transactions are not safe unless they're centralized. And so, so imagine if something like this happened on BCH, right? Like they could have no problem reorged all day long, everything. Like it was just coming out the other day that essentially one address does more than 50% of the entire network's activity. And just a further point, think about what the attacker stole, right? If they would have stole XRP, if they would have stole BCH, anything else that they would have stolen, they would have probably likely not gotten away with. But Bitcoin is the one true decentralized currency that's actually at scale to the point to where you actually can't collude to stop it. So I thought that was again a beautiful sort of demonstration of Bitcoin's decentralization. How everybody kind of stood up and said that, look, this is just really in reality not that possible. But like you say, Spencer, I really just don't like how it was kind of proposed as something that was even relatively like feasible. But we'll see how it goes. Any final comments, guys, on this topic? Spencer or Tim?
Yeah, just jump in real quick. I just say, I actually do know like many of the developers that were helping advise CZ on this, and they are Bitcoiners. They are extremely smart. They're some of the smartest people I know in the space. So, I do think it's worth just understanding kind of where they're coming from. They want what's best for Bitcoin as well. And again, my subjective opinion is that I think that in some ways they failed to consider kind of the human element of the network. But they were exactly right as far as the technical components here, that this is not disallowed under the protocol, and it is something that could happen. So I don't think that they're wrong to explore it.
No, you're absolutely right. Technically speaking, it is feasible if you sort of catch it early on, right? The reality now is you need to consider the second and third order effects of that action. And if you reduce Bitcoin's perceived immutability in the market, then companies like Binance, who are holding large amounts of BTC, will actually be hurt from that, as Bitcoins can very much decrease in value should the perceived immutability in the market be diminished. And so in the end of the day, it's that the beautiful game theory of Bitcoin. All actors are sort of around it and have self-interest aligned to the collective general consensus interests.
Absolutely, absolutely. All right, well, great discussion so far, guys. We got one more topic left, so please, if you guys are new to the channel, hit the subscribe button. If you guys like what you see, please hit the thumbs up. And if you enjoy content like this and want to support it, definitely check out our website, cryptocast.network, where you guys can find our QR code for donations. We really appreciate it. And if you guys are listening on the audio stream, we really would appreciate a review on iTunes, as that helps us get, again, into more people's feeds. So thank you guys so much for joining. We have one final topic left. This one is pretty near and dear to my heart, pretty exciting to me, guys. Talking about the Lightning Network, of course, and just really kind of talking about Bitcoin at the 10,000 level view, which is the macro scale where I kind of live and where I kind of live and breathe when it comes to Bitcoin. I really enjoy the zoom out. And I want to get some opinions from you guys, because now both these guys have amazing articles that we're going to talk about. I want you guys to make sure you check out the links below in the discussion. But both of these guys have an awesome article that's sort of dealing with the same thing, which is essentially the combination of sort of Bitcoin and Lightning as this monetary stack, as this monetary layer. And so what I want to get from you guys first maybe is let's see, let's talk about Spencer's article, let's talk about Tibbs' article first, where essentially it goes into the history of the internet. Like you tell a little bit about how the ARPANET came to be, and how the internet was built in layers. And I think this is just really important for people to understand, because like from a regular person's understanding, what they see out there, they see all these thousands of coin, they see Bitcoin as just this thing, this ethereal thing. They can't really understand like what is it, who controls it, what is it. But you kind of really break this down in a way for people to understand, because I think that you compare it to the internet so well that maybe we can understand it that way, in a sense that the internet uses this thing called this OSI layer, right? This OSI layer model, which breaks the internet itself, the transmission of the data, into these different layers, specifically these 7 different layers. Now, many projects have tried to create something like money before, but they didn't really have these layers, and they certainly, of course, weren't decentralized. So we had things like like you talk about B-Money, DigiCash, Hashcash, BitGold, and things. So let me ask you, Tib, like maybe you can describe to a little bit a description about why you created this article, and maybe what is kind of the main point that you want to get across with this article.
Sure. Yeah. So Bitcoin has a lot of different narratives, and many different narratives will bring many different people to the space. And there's a monetary narrative that is extremely compelling. You have other waves of discourse on the libertarian aspect of Bitcoin and so on and so forth. And I felt like technology-wise, like I worked in technology before and investment in technology, and so I felt like for me personally, I tried to build a thesis around Bitcoin, but from a technological lens. And so looking at it, trying to speculate about the future requires a good understanding of the past, and of course speculation is often wrong, but at least if I understand better the past, I'll be less wrong. And so that was really the premise for the article. And so really digging into the guts of the internet and that sort of weird onion that has been around since the late 50s, right? ARPANET, which is the grandfather of the internet, was started in 1958 and connected the first geographically distinct computers and expanded to what we know today as the web, the World Wide Web. And so Bitcoin, and through that expansion, of course, it evolved in different layers, which are made of public computer network protocols. Most people don't know about these protocols, and the beauty of it, they don't need to know. It just works, and it enabled the internet to scale information distribution on Earth. So that's beautiful. And so looking at Bitcoin, you realize that it is doing the same thing with data. Now, the only thing that's very different between the internet and Bitcoin is that the internet made any type of data packet replicable in an unlimited manner for free. Bitcoin is doing the exact opposite. It's preventing people from copying data, and it's making it extremely expensive to create new data. And so once you understand how that construct comes to exist, you realize that, again, the layered approach to scaling that technology just makes sense. Because the first layer, so layer one or Bitcoin, or called the base layer, is making so many trade-offs on performance to ensure the immutability of that data, that it makes absolutely no sense to onboard billions of people on top of that. It needs to scale in layers. And so, again, you just grab the heuristics from how the internet got to evolve over time and just apply it to Bitcoin, and you realize, well, that's exactly what's happening right now. And Spencer actually has also included like other layers and other more visual components to it, which really goes to say that, yeah, we need to scale that thing and as an onion and in different layers. And so Lightning is that, beautiful cryptographically secure layer that enables to take the immutable pieces of data that reside on and scarce, because this is the most important element of that layer as well, is that it has a very high integrity, but it also, by nature of its scarcity, is extremely valuable. And so that's another thing that took me a while to understand, is that digital scarcity is actually something that is possible in our world today, and that resides on that network. And so this is comparable to the IP, so Internet Protocol, from the internet for information, but this time Bitcoin is the IP, so Internet Protocol, for value. And then you move upwards to a second layer, which is a Lightning Network. This is really the TCP, right? The Transmission Control Protocol for Bitcoin, which really takes the divisibility aspect of any unit of BTC, which is equal to 100 million Satoshis, and take those units and enable people to move them around in a routing system that is permissionless, that is almost free and almost anonymous, and almost instant. I'm saying almost because it never is, on the end of the spectrum, but that's pretty much it. So that's why I built this article. It was really to have a better understanding of the technology behind it, and to build a potential thesis of how it could evolve in the future as well. And we'll see. Time will tell. Market will tell.
Absolutely. I mean, I think this, and more than anything, really demonstrates the importance of history. Because people, a lot of people come into the space, and there's that classic meme. I just got here in Bitcoin. I'm here to fix it. And so there's a lot of people that are here. A lot of the blockchain folks are maybe like that. Maybe a little bit too utopian, maybe. As Andrea said, I think Ethereum people need to sort of remember that about those hardcore Bitcoiners who are fighting for unstoppable money, right? So that is they wouldn't be here. The Ethereum people wouldn't be here without that unstoppable money that started everything, right? Because Ethereum would have just got shut down, just like eGold and anything else, right? So I think it's really important to understand, for people to understand, that this history of layers that the internet had to go through in order to service. Because remember, there's all of these layers on the internet itself and this OSI model, so that it can service as many use cases as possible simultaneously. So not just your local network, but your bigger network, and then your bigger network, and then a wireless network, and then your network across the country, and then across the world, and on and on and on. We scaled this thing called the internet until it was, in fact, this global thing. I mean, back in the late 80s, email would take a couple days to get to the other side of the world. We think of that right now as impossible, but that's exactly what it was. And so I think that's just really important that people read this article so they can really get a grasp on how we scale distributed networks. And it's absolutely always in layers. And really, I think a big thing to take away of this is that the 2019 internet could not handle, or the 2009 internet could not handle the 2019 internet, use cases, amount of people, apps, anything couldn't. And the 2000 internet sure as hell could not sustain the 2009 internet with the amount of apps, video, HD streaming, and so on. And we keep going back, and you can keep going back, and you can see that this is what we thought was impossible, because there's a lot of PhDs that like to write out a lot of math theorems out there and say, nope, Bitcoin can't scale because X, right? Lightning can't scale because not enough transactions. not enough block space. There's going to be a lot of these people that say this stuff, but when we look back at the history of where we started in the 70s, and now look where we're streaming HD freaking videos, Blu-ray quality videos over Netflix like it's nothing. I think it's safe to say that layers is exactly how we're probably going to scale this internet of money. Just a quick feedback tip.
No, definitely, absolutely echo that, and also it helps you understand that cryptocurrencies that are trying to pour as many features as possible in a base layer isn't sound engineering. And so you need to understand that you have to make trade-offs for it to scale. And the layered approach is the most reasonable approach. And, for instance, privacy and anonymity might be properties that emerge on the second layer, not the third layer, not the first layer. And that's fine. It's just a matter of understanding what trade-offs are we comfortable with to ensure decentralization, which leads to overall censorship resistance.
Absolutely. And see, I just love the surprises in Bitcoin. Like we always get surprised. We're like, we thought we were going to have this, but no, we get this, and this. And, it's really interesting to see this evolve. But Spencer, let's go to you now. You have, again, an excellent, amazing article sort of breaking down this as Bitcoin Lightning as a stack, similar to TCP IP. You say that the BTC LN stack, which I, of course, am now going to say forever and ever on Twitter, forever. Like I'm not even going to do hashtag Bitcoin anymore. It's just going to be hashtag BTC LN. Pretty much, I think. But you go over some interesting things on this, and like Tib said, you give some of the visual elements of sort of how we got here to this BTC LN stack, and I think that was really great because you sort of outline, for example, like multisig plus SegWit plus time lock equals payment channels, and then payment channels plus HTLC equals Lightning Network. So it's just great to see that, because this is how I, as a programmer, as a developer, think of things as these blocks, right? I need a for loop to do this if I'm going to do this. I need an if statement to do this for conditions. And so we put these blocks together and we make something pretty big and expansive, and take these little simple building blocks and make things amazingly intricate and complex. So let me ask you, is Bitcoin BTC LN, is the stack going to are we going to start thinking of this as the TCP IP stack in the future of money? Are we really going to start thinking of this as the BTC LN stack morphing into this native internet money?
100%. Yeah, I think so. And to kick things off, I mean, for one, I definitely agree with everything that you and Tib have said so far on the subject. I think the first thing to ask is, like, if we're imagining kind of this stack emerging, is why hasn't it happened already? And I think really we have to acknowledge that, we've been in an experimentation phase. Before you can really see people coalesce around a given protocol and start really building out the stack, they need to know that they're building around the right stack. And while the three of us might have had conviction that maybe the Bitcoin had a disproportionate probability of being the right stack to build on, I don't think the world has been convinced of that just yet. And we needed more experimentation. So hence the reason why I think over the past few years, we've really seen the market test out what does the best base layer look like. And if you make improvements to Bitcoin, if you can create a better Bitcoin, is it enough to overcome Bitcoin's established network effects, brand, distribution, etc.? And so far, I think the answer to that has been a resounding no, that none of these, quote unquote improvements, or really, Tib, you put it exactly right, trade-offs. These are all just trade-offs. Are any of these trade-offs sufficient to overcome like where Bitcoin already is? And so I think this is kind of a natural phase that we've gone through. We've tested, base layer privacy chains, things for expressiveness, things for speed. And, some of those I think we're answering kind of sequentially. So, if speed was going to be the defining factor and getting more transactions per second is what defined a winner in the space, then, Litecoin would have passed up Bitcoin many years ago. We had that experiment out for a while. In more recent years, we've had things like Ethereum and EOS experimenting with some combination of kind of throughput speed and expressiveness. How important is it to be able to write really expressive things on top of it? And I think that's a worthwhile and interesting experiments as well. And then we're seeing things with privacy too. I think as time passes, again, momentum continues to kind of coalesce around the Bitcoin protocol. And I think that we're going to start to see people build up the stack. So, the point of the article that I wrote there was really that, Lightning is great. I think it's going to be incredibly useful, but I also think it's just one part of the emerging stack that we're going to see. And those layers, on one hand, I felt kind of silly writing this article because I couldn't say what the other layers are going to be. Are they going to be things that, improve privacy? Are there going to be layers that have superior expressiveness that then ultimately settle and route back into Bitcoin for security? I really don't know what they're going to be. But again, I do think that we're going to see those things emerge. And then the other point of the article was also just highlighting that while I'm really excited about Lightning Network and I think it's going to be really useful long term, I think people are probably over expecting on its impact in the next kind of 12, 18, even 24 months. This is a long game. And I think even a lot of the usage of something like the Lightning Network that we're going to see 5 years from now is not even necessarily going to be directly from users using the Lightning Network directly, but potentially applications in other layers that are built on top of Lightning Network that are using those and obfuscating them away from end users.
Absolutely, it's kind of funny, people they just want Lightning Network yesterday. They're like, what do you mean? Why do you guys always keep saying 18 months? Why do you guys always keep saying 18 months? And it's like, look, there's a crap load of stuff that happens in 18 months. Let's see here. We went freaking beta on mainnet last year. I mean, we have a huge ecosystem. There's going to be, that reminds me, there's going to be amazing. They just announced at the Magic Crypto Conference, there's going to be a Lightning conference, guys, this year in October. Make sure you stay tuned to Lightning for that. L&D Labs. Dude, they're going to get all three teams, everybody together, a lot of Lightning companies, LN Pizza, LN Games, all that stuff. They're all going to be there in Berlin this October. So you guys got to check that out. I think I might have to go to that. I mean, I want to be able to, because I can't say I was at the first Bitcoin conference. And friggin' Trace says that shit all the time. Trace and Roger, they're like, I was at the first Bitcoin conference. They say that all the time. And I want to be able to say I was at the first Lightning Network conference, because you can say that 10 years from now. You can still say, guess what? I was at the first Lightning. When I was at the first Lightning Network conference, let me tell you, kiddies, so it's going to be pretty fun. But the ecosystem is growing to the point to where we actually need conferences now just for Lightning, guys. This is how big it's really getting. And such great points, I think, Spencer, you made about building up instead of out. This is the stack that people will coalesce on, and it's going to make no sense to use a different technology, to use a different stack. Yes, they're going to have different trade-offs, but with everybody else is speaking this language, it's going to behoove you to speak this language as well, because once you speak the language, well, then you can do almost anything. You can build additional things. You can build bridges some way, somehow, as long as you guys can speak the same language. And I really do see Lightning still as this kind of interoperable layer that's going to kind of connect everything together, from blockchains to Bitcoin to whatever. But that, again, is just one more layer. And like you say, Spencer, we don't know what all the layers will be. Like, I can understand how you feel a little silly writing the article, but it's still such an important article, because people need to know that just because it's not here yet doesn't mean it won't be here. People are thinking about this. I mean, channel factories could be like a layer 3. We're already thinking of additional layers. We don't know what they're going to be, but because we don't really know what the use cases will be. Remember, all of these layers get built so that we can facilitate new and more use cases, but they're not here yet. Bitcoin is still early. And so we're going to find out more of these. We're going to build more layers to support these use cases. And it's going to be, the internet of money. So it's really interesting to see a lot of these people focusing on, maybe focusing on features or metrics instead of trade-offs. They're like, yeah, but I can do 1,000 transactions a second. That's like a feature or a metric. But that's just one little feature or metric. What about the trade-off? What are you trading off to obtain that 1,000 transactions per second? So I encourage everybody who's listening to this and to tell everybody else, start thinking more in trade-offs, guys, instead of features, because we can slap features on a freaking Photoshop file all day long and market the hell out of that. That's not what's going to give value. That's not what gives Bitcoin its ultimate value, as the market has seen. And of course, as always, guys, the market is going to choose. The market is going to decide. So we're going to see how this all plays out. But I'm super excited. And articles like these guys are writing are paving the way for us to be able to imagine this stuff, to be able to picture this stuff in our minds, so we can then eventually build it. So I really think a big thanks to you guys, Spencer, guys, to Tim. Thanks, guys, so much for this article. And again, thank you guys so much for being here. I really appreciate it. Let's get your final thoughts on here. Go ahead, Spencer, first.
Sure. Yeah. One of the things I want to throw in to tie in two threads, because you talked about the Lightning conference coming up that's just been announced, and then also you mentioned Bitcoin 2019 earlier. So on the week of Bitcoin 2019, we have not announced this yet, but stay tuned. We'll have more details. At Blockchain Capital, we will be hosting a Lightning-focused event. It'll be a little bit of a hackathon as well. So there's going to be all of the kind of cool Lightning apps you can do. We're going to have an event where people can come in, set everyone up with Lightning wallets. Everyone's going to be using the Lightning network. Everyone's going to be feeding the chickens and doing all the fun things that you can do on Lightning today. And then we're going to have a set of maybe 5 to 7 kind of finalists from a short hackathon kind of come up and pitch their ideas. We have a panel of judges that are mostly technical founders in the space that are going to vote on kind of their favorite. And then we're also going to have everyone in the crowd using Lightning Network to vote on their favorites as well. So, it'll
Very
be
cool.
it'll be a lot of kind of like honestly gimmicky kind of like cutesy little things that you can do with Lightning today, but it gets everyone using it. It gets everyone to start kind of understand the power of it. And so, looking forward to that, and stay tuned for more details.
Absolutely. The internet was once a cutesy little thing in a science in a scientist's office between two computers. And then we moved that freaking computer to the other side of the country. Go ahead, Tim. What is your final thoughts, man?
Excited for Lightning. It is very much the early days, but what I'm realizing is that it's much more interesting for developers. For instance, much more welcoming, much more friendly than contributing to Bitcoin Core, and truly believe it's gonna really gain a velocity of development that is perhaps, 10x bigger than Bitcoin in terms of the iteration cycle, in terms of the amount of people contributing, and in terms of the ideas being shared. So very much excited to see what the next 12 months bring for Lightning. Even though I think that we still need to be aware that it's for reckless people, and that you can lose your funds because even channel backups are poor. So just keep in mind that those Satoshis may be worth 100x or 1000x their current value in 20, 30 years. So are you comfortable with this? If you are, then yeah, for sure, be reckless.
Spencer, go ahead.
Yeah, just to jump in there, Tim, because you touched on something super important there. A really interesting dynamic here. And we talked at the Vortex, you talked at the outset of the show about how, if anything, like Bitcoin development might be moving too quickly. I don't think that's like necessarily the case, actually moving too quickly, but it is important to understand, when you have something that requires consensus-wide or network-wide consensus, and we have a $100 billion network, that we do need to be very careful. But what's great is Tib's point exactly, that as you move up the stack and you have these other layers, that you can iterate and develop much quicker. So I think that as we kind of build up the stack, we're going to see much faster development cycles, and a much more welcoming environment for people, because it doesn't put everyone's Bitcoin at risk when you build these things. They are opt-in networks. Nobody has to use Lightning. Lightning itself does not put anybody else's Bitcoin at risk. And so it's just a very different kind of risk-reward trade-off that allows for a lot more innovation and rapid development cycles that makes me really excited.
Yeah, absolutely. I mean, remember, guys, this is how the internet was built. I mean, the internet was moving really slow for like decades. I mean, a couple of decades, there wasn't really anything. It was going slow. There wasn't really anything new. They were just developing the core protocols, the actual freaking core protocols of the internet that we use today. And things didn't get exciting until what happened? We moved up the stack and built the web, right? We moved up the stack and went to HTTP, built this other protocol on top of TCP/IP that now we can do anything with, and it didn't freaking affect the underlying layer. Anybody could make a website. It wouldn't break the internet, okay? And this is exactly what's going to happen with Bitcoin. Right now, it's mostly focused, guys, on protocol development. This is the core protocol, the very base layer, the stuff that the core developers don't even really want to touch. I mean, there's code in there that they don't even want to really touch. There's very, very, very difficult stuff in there, very core level stuff that you don't really want to touch. Now, as we move up the stack to something like Lightning, like these guys have said, you can make all the Lightning apps you want all day. You are not going to break Bitcoin, like no matter what you do. So that is just absolutely awesome to see, and that's going to continue. So that's kind of how the web evolved to be like just nothing forever, slow forever, and then the 90s, bam, it exploded. That's going to be similar to how Bitcoin is going to be, where it's going to be this kind of nascent thing, and then we start building up those layers with Lightning. Like I'm predicting, like around 2022 to 2023, we're going to really see that knee of an S curve of Lightning. That is when stuff is going to really start getting interesting. That's when the masses can start piling on. Remember, the Lightning is not even going to allow the limits to be removed. It's beta limits until like next year at least. So there's still like the actual retail customers aren't really even sort of invited yet to be on there yet, because they simply can't yet. So it's mostly, again, for experimentation to make sure that we can get this right. And when it's ready, well, we lift the limits and we let the freaking world pile in. With the internet, basically everybody was figuring out, should we sell stuff on the web or not? Then the regulations came out, said, guess what? It's good to sell stuff, and the entire freaking world piled on. So that's kind of how I see it happening. And again, guys, this is going to play out over decades, as the guests have very intelligently said. This is a long game. and this is going to play out over decades. So make sure you guys follow smart people like these guys. Of course, I have their links and links in the show notes below. Just final comment, Spencer. Where can we find you, sir? Where can we find out more about you?
Sure. Best place is on Twitter. My handle is Creme de la Crypto.
Creme de la Crypto. Yeah, check out that. Check out Spencer's company as well. He's got that on his Twitter account. And then Tib, where can we find out more about you, sir?
Same thing. Twitter's the best place. DM's open. THIBM_.
Awesome, man. So check those guys out, and really, we're gonna be talking about Bitcoin, guys. I think for many, many, many more years until it gets boring, like the dollar, and then nobody cares anymore. But that's probably decades away. So until then, guys, make sure you keep watching the CryptoCast Network. We got more shows coming out. We really appreciate everybody joining today. I just want to thank everybody, thank the guests so much for taking time out of their Sundays. Thank you guys for being here. And if you guys missed the show, make sure to join us in the comments below. Of course, we're gonna have the audio version up as well. So if you missed the live stream, check that out as well. So thanks guys so much for joining us. Really, really appreciate it. Until next time, guys, please keep talking Bitcoin, and we'll see you guys later.
Yeah.
Take care.
Thank you, Vortex. Bye.